Right, another 30 seconds and we'll start. Good morning. I'm Ihsan Karif. I'm head of Savills office in beautiful Oman here. Thank you very much for joining us today. As you know, we published our property report last week, and we had a very good response to that. We had quite a lot of follow-up queries, quite a lot of these linking Oman to the regional real estate markets, a lot sort of asked about what's happening in other countries, a bit more clarifications on what's happening in Oman. So I'm really pleased to have sort of Matt Wright with us today. He's head of strategic consulting for Savills Oman. Matt covered the Oman market for over a decade. He supported quite a lot of local, regional and international developers, investors of all sizes in the country. We also have with us Swapnil Pillai, who oversees regional research, and he's based in Dubai. Swapnil has insights into pretty much every market in the region, including some of the developments currently going ahead. There will be a presentation first, which Matt will give. We can go through the questions afterwards. As a kind of a side point, some of the questions you may have shared with us were changed slightly, just to sort of allow the flow of the discussion to go in a particular way and then sort of link all of the topics together. So thank you again for joining us, and I will ask Matt to start the presentation. Thank you.
Thank you, Ihsan. Good morning, everyone, and thank you for taking the time to attend this webinar, in which we'll be presenting the findings of the recently released Savills Property Report for MUSCAT. My name is Matthew Wright, and I'm the head of research and consultancy for Savills in Oman. As a brief overview of what we'll be presenting and discussing, we're having a look at macroeconomic trends and an outlook for that. And we'll also have a look at what's happening and what's likely to happen in the office and residential rental markets in Muscat. Naturally, there's going to be a particular focus on the impacts of COVID-19 and reduced oil prices over recent months and into the future. In terms of the macroeconomic overview and outlook, we'll be taking a look at oil price trends, the impacts of oil prices on the economy, employment trends for expatriates, and trends in the population of Oman. Now, if we look at this chart, it shows historic average oil prices since 2014. So that's the orange line on the left. And then the World Bank's outlook for average global oil prices over the coming 5 years, which is the dotted line on the right-hand side. So as you can see, there's a significant drop in oil values in 2014, 2015. These then start to recover to 2018, but saw a slight drop last year when they went from just under 70 to just over $60 per barrel. The reason, and obviously now oil prices have dropped again since COVID. The outlook at the moment, or made in April by the World Bank, was that oil is going to trade at an average value of around $35 per barrel this year, and then show a very gradual recovery in value over the coming 5 years. But at the moment, they're not expecting any significant growth in oil prices. The reason this is important is that although the economy, the focus has been on diversifying Oman's economy, it still remains reliant and heavily influenced by the value of oil. So drops in oil prices have a significant negative impact on the economy, and also that government income over recent years has relied on oil to account for around 75% of its annual income. This chart also well-banked figures and shows average global oil prices for this year. So as you can see, we dropped from just over $60 per barrel in January, and then as the impacts of the pandemic kicked in, we reached a low point of just over $20 per barrel in April. Things have improved since then, and oil is now trading at just over $40 a barrel. When we look at historically from this year, the oil has traded at an average of around $40 per barrel in the year to date, which is slightly better than the World Bank projections in April, which were for $35 per barrel. So things are better now, perhaps in comparison to the World Bank's outlook a couple of months ago, but I don't think anyone's expecting any significant increases in the oil values over the coming few months. So in terms of oil prices and their impact on the economy, this chart shows the average annual value of a barrel of oil, which is the yellow line, and then this is compared to national gross domestic product. So there's obviously a very strong correlation in GDP trends and the movement in the value of oil. So GDP actually dropped after showing a few years of good recovery from sort of 2016 to 2018. GDP dropped last year in Oman. This was it was almost entirely down to the fact that oil reduced in value from $68 a barrel to $61 a barrel. So that emphasizes the impact that oil still has on the economy. There's a very crude comparison. The value of oil now at around $40 a barrel is identical to 2016. And so one can draw some lessons from that in terms of GDP trends. Now, in terms of expatriate employment trends, there was strong growth up to 2017, but since 2017, we've seen a drop of around 15% in expatriate employee numbers in the Sultanate. The very important thing to note is that when you look at the education levels, the vast majority of expatriate employees are not educated to a particularly high level. Government figures show that over recent years, it's averaged around 8 to 10% of expatriate employees have a further or higher education qualification, and these really are the professional level expatriates. So taking a closer look at expatriates with higher education levels, those are the professional level expatriates. Numbers started to actually drop in 2016. As a result of this, now, well, at the end of June this year, there are around 30,000 fewer expatriate professionals in comparison to 2015, which is a drop of around about 20%. In our experience, the significant majority of these will have been based in MUSCAT, which is where commercial activity in the Sultanate is concentrated. The reason this is important is that professional expatriates drive the residential rental market in Muscat to a very significant degree. And also, if there are fewer professional expatriates, there's also the potential for a reduced requirement in terms of office space. And lastly, in terms of overall population, the total population of Oman showed a really strong growth from 3.6 million in 2012 to 4.6 million in 2016. It then subsequently leveled off from 2017 to 2019, but actually showed a slight drop, where started to decline in 2020. The growth from 2012 to 2016 was driven to a significant degree by a significant increase in the expatriate population, which grew from 1.5 million to 2.1 million over this period, an increase of 600,000 or so. The expatriate population has actually dropped over recent years. It's declined by around about 220,000 since 2016, while we've seen an acceleration in this decline in 2019 and the first half of this year. In terms of our sort of outlook in macroeconomic terms for the remainder of 2020, COVID-19 and low oil prices are going to continue to have a significant impact. As a result of this, what in very broad terms, what we'd see over the coming months is reduced economic activity and lower gross domestic product. We'd see lower government revenues and also an ongoing reduction in the expatriate population as the impacts of the pandemic continue to be felt. We'd also see, with less money in the economy, that some personal incomes may be lower, and therefore that average spending power could also be reduced. We'll now take a look at the office rental market in Muscat. So this chart shows average office rental values over the last 10 years for various locations in the city. As you can see, really, office rental values have been under pressure for the last decade, essentially since the global financial crisis in 2008, 2009. So the market was already under downward pressure even prior to the impacts of the pandemic being felt. So there's also been a significant growth in the supply of office space over recent years. Well, even prior to the pandemic, the demand for office space in Muscat is relatively muted, in a very high level that we'd estimate that there's approximately around about 25,000 square meters of office space take up annually over recent years, which is in the face of an increasing supply. There's a growing imbalance between the two. Demand over recent years has been almost entirely from within Oman. We see limited interest in office space from outside the Sultanate. And in general terms, for rental values, well, obviously there was decline post the global financial crisis. We then saw some stability returning to the market from 2013 to 2015. But following the drop in oil prices in 2014, 2015, the average achievable rental values have continued to decline across the city. In very high level terms, average office rental values have have dropped by around about 20 to 25% since 2015. So in terms of the impacts of COVID-19 to date on the office rental market, well, naturally there is negligible demand for office space during lockdown. We've seen demand pick up since June. It's still relatively limited, but certainly a lot better than it was a couple of months ago. The majority of demand remains, as over recent years, for smaller, fully finished office units rather than larger shell and core spaces. One trend we have seen starting to emerge is some office space tenants looking to downsize their office requirement in terms of the amount of, so they're looking for smaller office units in comparison to the one they're leasing at the moment. This is either as a result of a reduced number of employees and or people continuing or growing numbers working from home instead of attending the office. In terms of what we're seeing from tenants over recent months, well, tenants are generally looking to offer reduced rental values. These are often, offers are often significantly below asking prices, and or they are looking for extended initial rent-free periods. For shell and core space, we're seeing an increasing trend of tenants looking for some form of landlord assistance with the fit out to reduce their initial costs. There isn't a significant amount of transactional evidence at the moment to draw out any particularly detailed figures, but our reading of the market at present from our commercial leasing team is that average rental values now are around 4 to 5 riyals per square metre per month for mid-market commercial buildings, and around about 6 to 8 riyals per square metre per month for higher grade office buildings. So in terms of what we foresee happening or trends over the coming 6 months, we would see a growing imbalance between demand and supply as new stock continues to be introduced to the market, while demand remains relatively muted. We'd also see a potentially lower requirement for office space overall as our working practices change and many people look to work from home either on a part-time or full-time basis. As over recent years, demand will remain focused primarily on smaller finished units, with much more muted demand for larger shell and core office spaces. And we'd also see that over the coming 6 months, demand is going to remain primarily from companies already within the Sultanate rather than people coming in. So the result of this is that we feel there'll be an ongoing downward pressure on rental values, but we also recognise that rental values are already very limited, and therefore that there is very limited room for them to drop. So in many ways we'd see one of the trends coming up to counteract this is that there'll be a focus on providing incentives in order to attract and retain tenants. And such incentives can include longer initial rent-free periods and either fit-out provision or fit-out assistance for larger shell and core spaces. Again, as over recent years, key issues in attracting and retaining tenants for commercial buildings are good car parking and that the building is well managed. Now we'll turn to the residential rental market in Muscat and have a quick look at trends there. So the first we'll look at is the Muscat population, because obviously the population affects the residential market to a significant degree. So as with the national population, the total population in Muscat grew very strongly from around 1.1 million people in 2012 to just under 1.5 million in 2016. So an increase of almost 400,000 people in that period. The population growth leveled off in 2017 and then started to drop slightly in 2018. We've seen a slightly accelerated decline over the first half of 2020 in terms of the total population. Now, the growth from 2012 to 2016 was driven to a significant degree by an increase in the number of expatriates in Muscat. So during this time period, it rose from 660,000 expatriates in Muscat to 930,000. So an increase of pushing 50% over a short period. However, since 2017, the expatriate population has dropped by around about 100,000 people. The impacts really are, well, the expatriate population drives the rental market, the residential rental market, and drops in the number of expatriates in the city, therefore have a significant impact on the residential market in terms of demand and market size, and therefore this has a knock-on impact on achievable rental values. In terms of rental value trends, the chart here, this shows average values for two-bedroom apartments in various locations in the city over recent years. As you can see, generally downward pressure over recent years, particularly since 2015. The apartment sector has been harder hit than arguably than the villa sector. And at a high level, we'd estimate that there's been an average drop of around 30 to 40% in achievable rental values for apartments from 2014 to 2019. Now, part of the reason, there are obviously two drivers for this. One is lower demand as the expatriate population has reduced over recent years. The other is that there's an ongoing increase in the supply of apartments, and just as one example, over the last 2 years there have been over 1,000 apartments introduced and completed in the Boulevard area of Muscat Hills. Now, many of these will be investment properties which will be introduced to the rental market, so an ongoing increase in supply relative to demand is having an impact on achievable rental values. Now, in comparison, this chart shows average monthly rental values for four-bedroom villas in various locations. Now, a particular trend to note here is that in the prime locations of Muscat Hills, Al Mouj and Shati Al Quran, rents have actually been reasonably stable over recent years. And the reason that we see for this is people's desire to live in those locations relative to a limited supply of villas and townhouses relative to demand in those locations. So that higher end, larger villa sector has been more resilient in terms of achievable rental values than apartments. So for the residential rental market, the impacts of the pandemic over recent months have been that obviously there is negligible demand for residential units during lockdown. Now this it's grown since June, but demand levels are still pretty limited in comparison to the pre-pandemic. The demand, obviously, with travel restrictions is currently only from tenants already living in Muscat. There's no inflow of expatriates to Muscat at the moment. And recent months have naturally seen many tenants looking for reduced rental values in comparison to asking prices. There's, again, with relatively limited transactions, there aren't enough transactions to come out with accurate or very defined numbers. But in the experience of our residential agency team, that average rental values have dropped by around about 10 to 20% since the start of this year as a result of the impacts of the pandemic. In terms of outlook for what we see happening over the next 6 months or so, we'd expect to see an ongoing decline in the expatriate population living in Muscat, and that will result in a reduced market size and therefore reduced demand over the coming months. Apartments are much more effective, as we've shown, than villas, but rental values, the general trend has been for a decline since 2015. Our feeling is that rental values will continue to come under pressure, and there's likely to be movements in the market, but we would see that better quality residential units in desirable locations are likely, and this particularly villas and townhouses, are likely to see a more resilient performance in comparison to more mid-grade properties. We would see a potential trend for tenants to look to upgrade from their existing property. So as things become more affordable, that people might look for a larger property or a property in what they consider is a better location. And we'll also foresee, so traditionally, rent for residential units, historically it was paid annually in advance. For more recent years, it tended to be payments every 6 months. But we would foresee a trend of more tenant-friendly payment terms over the coming months. So we'd expect more leases to be on a monthly or quarterly payment basis. For higher grade apartment buildings, the key drivers that we see for that in terms of attracting and retaining tenants remain facilities, allocated parking, and good property management for the building. So that concludes the presentation of our property report. I will now hand back to Ihsan, and we will be taking questions from the audience.
I'm glad that the presentation sort of went okay. I know sort of we had some issues there with the internet in the end. I'm glad that sort of was sorted afterwards. Thank you very much for that, Matt. That's excellent. And by the way, we did get some additional questions throughout the presentation. If we can't get through these during the session now, we'll get back to you directly afterwards, sort of by email. So no worries if we don't answer your question now. We will get back to you after that. So I think we could probably just start with the questions now. I think one of the key points really, which is, I think was very important, was the trends that we're seeing in Oman. Are these ones that we're seeing throughout the region, or are they kind of reasonably unique for here? So Swapnil, from your side, are we seeing the same trends, say, on the commercial side in the wider region?
First of all, very good morning to you, Ihsan, and good morning to all who are joining us this morning. Now, from an office market perspective, I think there are three key themes that we are witnessing in Oman, which we have identified in the report. And to a larger extent, all these three themes are kind of interlinked with each other as well. So the first and foremost being there is a lack of demand or new entry of tenants or corporates into the Oman market. So there is in effect a very short pool of tenants in the Oman market as of now. And the existing ones are actually moving towards upgrading their office portfolio and moving towards better quality and better specification products. So that is the second theme that we are witnessing. And all these the two trends of a lack of international demand, as well as companies actually moving or consolidating their operations towards more grade A options. And in most cases, they're either taking up the same amount of space or kind of downsizing their office requirement, is resulting into a third and most important theme, which is a declining or a softening rental market. Now, to be honest, this is a trend or a theme that is being Yeah, sorry about that. So this is actually a trend or a theme that we have been, witnessing in other parts of the region as well. In Dubai, for example, we are seeing a continued shift of occupiers from grade B, grade C developments to recently completed grade A stock. There is also an increase in instances of companies kind of consolidating their portfolios, either in a build to suit development that they have done, or also across recently completed grade A projects. Now these are largely banking and financial sector companies, and again most of these corporates already had a presence in the city, and they're just consolidating their operations in the region.
Sorry, Swapnil, quickly, if I may, I think you mentioned obviously build to suit there. Would you mind just explaining a bit, I think, to some of our participants who may not know sort of the build to suit sort of that well?
Exactly. Yeah, exactly. So, like I said, a lot of the stock that was kind of operational or present in most of the, not just in Dubai, but in most other cities in the region, is kind of an inferior quality. And a lot of corporates are now focusing on getting into stocks which are more sustainable, which are, more environment friendly, that have specifications which are of international quality. So if they're not able to find something that suits their requirement from a speculative perspective, they are now looking at tying up with developers and creating bespoke products that would meet their requirements, not just right now, but based on all the technological advancements, what sort of office requirements they will have in 10 years time. So they're trying to incorporate all that and creating a bespoke build to suit product for their consumption.
No, thank you for that. Thanks for that. And I mean, that was obviously the commercial side. Are we seeing the same kind of trends on the residential side?
So just before I jump into residential, I wanted to highlight that, even though we are seeing a similar trend across most of the markets in the region, there is one exception to the rule here, which is Riyadh in Saudi Arabia, where in fact we are seeing a lot more demand from corporates, trying to enter the market. In fact, in the last 6 to 12 months, we have seen an increase in transaction activity for spaces which are 100,000 square feet and above, from companies which are either already present in the region. They might be having an office in Dubai or Bahrain or Oman, for example, but they are now looking at setting up their own corporate headquarters in Saudi Arabia. So we are seeing that happening. This is again from companies from the banking and financial services sector. We are seeing this happening from companies in the pharmaceutical sector, media, F&B sector, etc. But we are also seeing a lot of companies from the defense manufacturing sector who are not even present in the region, setting up their offices in Riyadh. So Riyadh is definitely an exception to the rule. And because of that, the rental values have kind of held steady. The leases there are typically 5 years and above. So you're seeing longer term space take up as well. So that is the only exception to the rule as of now. Also Cairo in Egypt, to a certain extent, is seeing a lot more demand from F&B companies, media firms, market research and consulting firms taking up space because of the expanding population and the strong increase in disposable income and the stable economy there. Now, when we come to residential, again, residential kind of mirrors a similar trend to what we are seeing in the office sector. There is a demand-supply mismatch across most markets. But when we say demand-supply mismatch, I want to highlight or emphasize on the point that there is still demand across most of the markets. There is still transaction activity happening, and transactions are kind of improving or increasing on a annual basis across certain markets. In Dubai, for example, in 2019, transaction activities were up by almost 25% compared to 2018. Similarly, in 2020, just before the lockdown in Q1, the transaction activities were up by almost 10%. But the supply continues to outpace or outstrip this demand. We have close to 90,000 units lined up for completion in Dubai over the next 2 years. So even though the transaction activities are increasing, the supply continues to outpace this demand. So that is why we are seeing a continued decline in prices. Again, the drop in prices, like Matt highlighted, is completely widespread, and it depends upon the quality of the stock, the location, the reputation of the developer. And even right now, because of the whole COVID situation, it also depends upon the type of assets as well. Because we just concluded a survey on the lockdown living experiences of people, and we found that a lot of people now prefer to move from an apartment into a townhouse or a villa community. So we are seeing slightly more resilient prices across the townhouse and villa community.
Thanks a lot, Swapnil. That's very interesting. I mean, going back to Oman, Matt, obviously the report sort of pretty much had quite a lot of graphs sort of doing that. Looking ahead for, say, going 2021, do we expect to continue to see that in offices and residential?
Well, from the statistics that we presented on rental values, the markets were under pressure even pre-COVID. And obviously the pandemic and the lower oil prices have had a notable negative impact. What we'd hope is that the pandemic passes, or the impacts are reduced, and that as a result, we start to see some greater stability in both sectors. But at the moment, there's really not any evidence that there's likely to be a significant recovery in 2021.
Okay. I mean, that's quite, it is difficult. I mean, trying to sort of find some hope somewhere.
Well, I think
we think we might see, sort of some positivity with.
Yeah, I think that, obviously there's been a greater focus on e-commerce during lockdown. Has had a big impact on that sector, with a lot of entrants to the market. So I think, as buyers experience, that we could see some demand for better quality warehousing that's really suited to that e-commerce sector. In other ones, I think that you will tend to see, in terms of demand and rental values, that well-managed properties that are clearly focused on what their tenants want and need in both the office and residential sectors will tend to perform much more strongly than perhaps less well-considered or managed properties.
Excellent. No, thanks. Is that, the same across the region as well?
Yeah, like I said, I think there is a strong emphasis now in terms of the the relationship that the landlords have with their tenants. The more flexible the landlord is, I think they have a better chance of retaining or attracting more tenants. And again, there is a strong emphasis, like Matt mentioned, on facility management and having that extra value add to differentiate your product offering from what your competitor is offering. And there is, like we discussed from the office perspective, there is a continued shift towards a more sophisticated occupier base that is demanding product specifications and qualities which are of international standard. So so there is definitely a push towards a more professionally managed and well-managed properties across the region.
Excellent. And with regards to, I think one thing which I think has come up again, I think this will probably go to you, Matt, is people are trying to sort of find out, actually both, Matt and Swapnil, I think maybe you could probably start. Do rates, office rates, residential rates in Oman fall well below the wider region? Where do we fall generally in terms of average rates, obviously?
I think generally, the grade A stock in Oman does offer a much better value proposition compared to other parts in the region, but they're not way too off as well. Say, for example, in Oman, I think Matt mentioned for a grade A stock, you could find an office space anywhere from 4 Omani riyals to 8 Omani riyals per square meter per month. And I think when you compare that to Riyadh, it's around 9 Omani riyals to 14 Omani riyals. While in Dubai, it could be anywhere from 6 Omani riyals to 22 Omani riyals, depending upon the location and the specs.
That's very interesting. I mean, Matt, I think you looked at this as well from a kind of an international context, and you saw that it's not only the region. I think maybe we fit globally on sort of towards that.
Yeah, so obviously we've got a lot of global research with offices scattered across the world. And so we get regular information as to what offices are doing in other parts of the world. On a sort of Asian comparison, that we are pretty much level with Manila, but we're hugely below places like Singapore and Hong Kong, where the rental values would be 6-7 times as much as here.
Okay. I mean, just to kind of then take things slightly different, and again, this is sort of a question which I guess takes us a little bit away from the market. We've been asked, why are real estate companies in Oman not looking at the use of internet to sell or lease inventories? Matt, would you care to sort of run this one?
Well, yeah. So I've been in Oman for 15 years, and when I first started working as an agent, it was very simple. You just had a board and you had a website, and that was it. But obviously things have evolved rapidly over that period in terms of people's use of the internet. And so internet marketing has become an absolutely vital tool for the real estate sector. In terms of the ways that we use it in Oman for marketing, we obviously have our own website, which promotes and advises as to properties that we have available to rent or for sale. It advises as to the services that we can provide, how you can contact us, and it provides news and research to inform the market as to what's happening. We also use social media in a focused way, so Facebook, Instagram, Twitter, LinkedIn, etc. And then thirdly, particularly for selling and leasing properties, we also use third-party property portals. Because it's become such a key part of the business, we've actually got a regional marketing team who specialize in this. So they're constantly looking, innovating and adapting to make the most of the opportunities that the internet continues to provide.
Excellent. No, thanks for that, man. I think I can see a ton of questions still coming in, but I know we're kind of probably will be running out of time shortly. So I'm going to sort of take it to a kind of a really popular one that pretty much always comes up, and I know pretty much everyone's interested in. Are these pressures on prices? Are they offering any opportunities potentially to investors at this time? First in Oman, and then Swapnil, I'll come to you on a regional level.
Yeah, so people will still do well out of challenging times, and lower values are often a driver for, or they create opportunities for investors to purchase at more affordable levels. But the key to it is obviously the investor needs to understand the market and have a clear investment strategy and approach. So, to quote Warren Buffett, the best chance to deploy your capital is when things are going down. I just think so there will be opportunities, but you will need to be considered and careful as to how you approach them. In terms of development types, there are sectors that remain untapped to date in Oman. So we'd see some potential maybe for things such as service departments, providing for longer stays, but without the need for a tenant to buy any furniture or kitchen equipment or anything like that. We'd see some potential perhaps in the future for maybe retirement or care homes for retirees. And as discussed before, there's an opportunity probably for higher grade warehousing focused on that e-commerce side. In a more traditional way, I think there's the Omani population in Muscat is still going to carry on growing, and there's still going to be a big need for housing. So I think there is still a real opportunity for providing, good quality infrastructured villa development plots with some facilities near open spaces, kids' playgrounds, etc.
Thanks a lot for that, Matt. I mean, I think there's quite a few avenues there that you've offered, which I think are sort of quite sensible. And I know we've looked at quite a few of these sort of reasonably recently and quite closely. Swapnil, if you want to sort of just give maybe a couple of areas in the region, and then maybe give a closing point from you as a kind of a takeaway for people sort of to take from this webinar today.
Yeah, sure, Ihsan. See, basically, I think from an overall socio-economic perspective, the financial crisis or the recession that we're seeing right now is quite different to the one that happened in 08-09. So people who have a slightly bit more longer perspective or vision in terms of their finances are considering this as a very good opportunity to climb onto the property ladder. So from a residential perspective, your LTV ratios have gone up in most of the countries in the region. Your lending rates have actually come down, and developers are going all out and giving incentives and offers for people to make that property commitment. So I think from an outright financial commitment perspective, it is a very lucrative time for people to look at and consider investing in residential properties in the region. And I think a lot of people are doing that. We are seeing an uptick in transaction activities across the board. And I think that is going to continue in the next 6 to 12 months. Now, when it comes to office market, again, a lot of tenants whose leases are about to expire are going back to the landlords. And landlords are also quite flexible. Like Matt mentioned, the rentals are at probably a very low level. So there is no possibility of a further reduction in the quoted rental values, but then the landlords are coming out and giving them lease discounts or lease incentives such as extended rent-free periods or additional car parks or contributing to the fit out. So we are seeing that, and a lot of tenants are actually utilizing this opportunity to renegotiate their rents and commit to a slightly longer lease as well. Then there is again a strong focus from the governments in the region to diversify their economy. There is a strong focus on getting fintech as well as tech companies into the region. The whole the Belt and Road Initiative that has been initiated is driving demand for warehousing, good quality warehousing across Oman, across UAE and Saudi. And all these giga projects that are coming up in Saudi, as well as the strong residential supply that is coming up in Cairo, I think the market will continue to expand in the next few years. And this is a very good opportunity for people who plan to stay in the region, and even for companies who plan to be in the region from a longer perspective to commit to good quality stock when they can.
Thank you both very much. I mean, I think for me, I'm taking sort of quite a lot of positives from you. Obviously, the market is tough, market's difficult, but clearly opportunities are there. Quality is key, and you have to be pretty surgical with development. I would like to thank you all very much for being with us today. Really thank you a lot for the questions. We will get back to you if we didn't cover the point during the presentation. So bear with us, and the guys will get back to you directly on that. Again, until next time, I'll say goodbye and be safe. Thank you.
Thank you very much.
Thank you very much.